Good morning.
Say something funny about yourself. Introduce yourself.
Something funny?
Say something funny?
Bring this energy up.
Hi, my name is Navroop.
Don't try to.
Yeah, okay. Hi, I'm Ted Waz, and I'm the CEO of the Opinion Economy, and I'm also the co-founder of the Harvard Global Blockchain Alliance and a member of the Forbes Technology Council. Glad to be here. I'll be moderating today, and I have a couple of exceptional panelists, so I'll let them introduce themselves.
All right. Hello, my name is Navroop Sahdev. I'm a fellow at MIT Media Lab, also a research fellow at University College London at the Center for Blockchain Technologies, and both the institutions are doing quite a bit of work in the space, and I engage in research with them. I'm also the head of research for an asset management firm based out of Boston. We're building a crowdfunding platform for crowdfunded equity. And that's really, one space that I started out with, into the rabbit hole of blockchain. I'm also the co-author of Hyperledger's Blockchain for Business online course. We have around 100,000 students who registered in the first 3 months of putting the course out there around the world. So we're proud of that. And other than that, I've been advising companies over the past 1 year on their go-to blockchain strategy, if you may.
That's a lot for both of you guys. That's nice. My name is Aman Quadri. I'm the CEO of AMSYS Blockchain and Cryptocurrency. We're a division of AMSYS Group. We've been around for 15 years developing and incubating technologies. We're based out of Houston, Texas. I actually am in Austin. We're currently in development of 3 of our own blockchain platforms, one of which we're doing an ICO on currently. And then we help develop blockchain technologies for other companies, either helping them get onto the space or help them develop their own public chain itself based on what their needs are. I myself am a healthcare background, so the main project that we're working on as a company is healthcare related. We can probably touch on that later, but our passion is to use technology to help other companies get into the space. That's really what we're doing in a nutshell.
Terrific. So I'd like to, first of all, thank Sydney for curating this opportunity for us. It's important that we have discussions around blockchain. It's important that we understand and start a dialogue, because this is not necessarily simple information. So we have to strike a balance between the information complexity and the freedom to act, which will allow us to build a shared understanding. So diving into that, let's start with our first question. Blockchain represents the promise of decentralization. How is the battle between decentralization and the democracy of the individual contrasted with corporate adoption and expansion into governments and other entities?
Yeah, that's a long question. Okay.
I'm going to need a translator for that question there, Ted.
Yeah, I agree. So indeed, I mean, the way the current global financial markets are structured, we have a lot of capital deployed in a lot of concentrated hubs, if you may. And blockchain, and starting with the Bitcoin blockchain, which is the first one, right, started as a way to bypass, if you may, this global financial system and have a truly global decentralized network. So indeed, that is a true promise of the technology. Now, that's debatable if that continues to be the case, because as more and more companies are looking into the space to use the technology to gain greater economic efficiencies, there is a danger of diluting this decentralization aspect of the technology, particularly if you look at the permission ledger space, right? And I know it firsthand from my experience with Hyperledger, and I guess it's an open question looking into the future. The way I see it, there would be public chains for the individuals to use, with the more client-facing, but there would also be the more B2B private permission networks, because if you think about it, big banks, there are millions and billions of dollars involved when they're doing transactions. They are in a highly regulated, compliant environment. They need to know who their counterparties are. So they cannot be on an anonymous Bitcoin or Ethereum network. So I really see that there would be a coexistence of the two, and hence the issue that needs to be solved at the moment is of interoperability after scalability is achieved, which we're not there yet, but I'll let Aman take care of the rest of it.
Yeah. Well, I'm going to use an example. I'll use an example of healthcare finance. That's where our space lies because we're involved with a lot of different projects. There are a lot of people that say you should be fully decentralized in the healthcare space, but that's impossible. I really feel like there's issues that come up between security, privacy, GDPR, SEC. I mean, there's HIPAA. So what we have to do is, I think we're moving towards decentralization, but we have to do it in a stair-step manner. So we've started with private chains, we're moving to permission chains, and I think eventually we'll end up in public chains. And so even during our build, we had a lot of pushback from the community that said, why aren't you on a public chain? All right, why aren't you fully decentralized? And we felt like we didn't have the confidence in it. So what we're doing is we're proving the concepts work, and then we're moving towards public chains and full decentralization. And so when we created healthcare consortiums to work with, what we're telling them is, if you want to be on a fully decentralized network, that's great. We don't feel like we can be there, but we can have these hybrid models where we can have interoperability between private and permission and public and permission, and we can still be able to work together. So I think we're getting there. I don't think you can have full decentralization right off the bat, which there are a lot of proponents for it, but I think we can work in combination with other companies who do, and we utilize Hyperledger for our build, mainly because we feel like that it's the best play for us, but we still have public connections, public blockchain connections.
Yeah, I would say the European Commission is looking at blockchain technologies in such a manner where, for example, a bank has a period of 5 years where they can either do their compliance the traditional way, or they can do it on, on chain, if you may. And so then it is your choice. Sure, there are some sunk costs in the beginning of moving from one infrastructure technology to the next one, but in the longer term, it actually phases out the idea of auditing, which by definition is something that happens ex post to real-time regulation. And so that's one example when you have a time period to move.
So let's move on to an easier question. The unbanked. Not really an easier question.
That's not an easy question right there.
Toughest question.
That's right.
Yeah. So one of the real opportunities of using cryptocurrency and using the blockchain is it provides the potential to be able to reach the unbanked in a way that it has not been possible before. With over 2 billion people that don't have access to banking or lending institution or financial instruments, how do you see this as a tool to reach them, and then what's going to happen when they are reached? We'll start with you, Aman, first.
We've worked on a couple of projects for the Unbanked, especially in South America, mainly because we find that, one, identity is an issue. If you don't have an identity, it's hard to really have a bank account or do financial transactions. And so we've worked with a couple of organizations that want to create simple identity platforms. And from there, then they can create this identity that can be used for something else. And what we find is that these organizations are creating peer-to-peer lending platforms. So they're able to, let's use Argentina, for example, because we did a little project, a little proof of concept project there. There's a farmer who wants to be able to sell his grain, his grain over to a marketplace, and that marketplace does everything in cash. This guy does everything in cash, and what they found is that they don't want to be storing all those monies in their home underneath their mattress. So what they've done is they've created a small cryptocurrency which they can trade within themselves, and then they can utilize that to do a further trade somewhere else in the world, or now they're actually using it for supply chain management, which is kind of unique for coffee beans in Nicaragua. And so what they've done is they've created this little micro ecosystem that allows them to be able to make trades, send goods and services, and actually make money for their families where they couldn't do that before. And no financial institution would provide lending or would even provide them even something as a microloan for $200. But through this system, they can actually microloan to themselves. And so the unbanked get that opportunity to be able to help each other out, and that's through peer-to-peer platforms that we've been messing around with.
Yeah, I agree with Aman there in terms of, obviously the identity is the first piece that needs to be sorted out before you can tie that to anything. But I mean, that again sort of goes back to how identity is probably even an even more exciting use case than finance. With regard to reaching out to the unbanked, I mean, there are a lot of people in this country who are not really part of the mainstream financial services system, right? And you don't necessarily need to be in a remote area 200 kilometers away from anything called civilization. But let's take a step back and really understand what's going on at a systemic level, right? After the Dodd-Frank Act, the cost of compliance to banks to date is around $32 billion and counting. This is not to say we should just like, get rid of it. It solves some purpose. But what's happening with increased costs of compliance is that there is less money to go to the end customer for banks. So for a lot of the big banks, it's not worth to be having a relationship with the small guy. So that's one. The second component is the money that goes into funding small companies, small businesses. The budgets that banks had has also reduced over the past 10 years. And hence you've seen a counter movement, which is the crowdfunding movement. And I would really argue that ICOs is actually the same thing in the evolution of crowdfunding as one of the tools to raise capital. With these emergent stuff in keeping in mind this stuff, we're looking at alternative ways to reach out to folks, the small people. And in that case, I would say mobile devices is the key. So Wi-Fi and broadband networks have now been able to reach every part of the world, but there's one way that the world is able to actually connect to the internet is the mobile devices. So again, we've seen in China, P2P economies, M-Pesa in Kenya, who have really leapfrogged it. And how can blockchain help these people is really through these dApps, I would say, that can help them connect to a peer-to-peer network or more like a hybrid model, which is like a hub and spoke sort of network than a truly P2P model. And that hardware can be deployed to reach them.
Yeah, another one that I've seen recently is a company that we're talking with. Actually, we're thinking about investing in them. Is that they're allowing movement of cryptocurrency through social media channels. So through Facebook or Instagram or Telegram. And so when you open up the avenues of using social media, which my wife and I actually have some nonprofits in Nicaragua, and no matter where we go deep in the jungle, you will find cell reception and a person with a cell phone. They may not have a house, but they have a cell phone. And so if you're actually able to trade crypto through the social media, and all of them are on Facebook. Every time I go to a community, it's like, what's your Facebook? And so you're able to connect with people, and if you can connect with them and they can provide you a microservice that you can pay for through a social media channel, imagine the impact that has all across the world when now everybody can pay each other through these mediums. And that lends itself to a whole different way for the unbanked to get access to capital.
So you actually bring up a wonderful point, and that's the use of social media. And social media and blockchain don't necessarily have to go together. No. But one of the interesting things that it does do is it creates an immutable record and builds upon the democracy of consensus with social media. So we have a very topical conversation right now in the United States. We have the whole Cambridge Analytica issue and psychographic information and data monetization and use. Yep. So as we're looking at the use of social media and we're looking at blockchain, how are things like KYC, AML, GDPR, and even FCPA, and that was a lot of alphabet soup, and if you don't know what that is, you will very soon. You will. How do you see those things impacting the use and adoption of blockchain, or the risks associated with launching an ICO?
Well, I think the pundits that are truly decentralized and want to be involved in the crypto space do not like KYC AML. The whole purpose of it is to have the ability to make transactions without without being monitored or without having it put on a ledger. What we found is that because of rules like the SEC and GDPR, and we're in healthcare, so we actually have to monitor all of those transactions on a regular basis, that KYC and AML blockchain companies are becoming, oh gosh, there's a dime a dozen now. And what they're trying to do is be able to provide the right identity for management of your, of all platforms, to be able to get into the financial institutions, to be able to access your medical records. All those things are important. So we still have to work within the confines of the regulations that are out there. And so what we have to do is we provide people the space to be able to be involved in new technologies, but still be able to maintain the regulations that are available. And if we do that, I think we can be okay with that. I don't think that really answered your question, but
well, it's not a bad start. So yeah. Navroop, if we're looking at things like Know Your Customer and anti-money laundering, or HIPAA in the healthcare space, or the General Data Privacy Regulation, what advice would you give to those that want to either invest in an ICO or those who are launching an ICO to be able to become informed and to protect themselves around those issues?
Yeah, so I'm not a lawyer, but I've heard lawyers talking, and what they suggest is get under the rug as soon as possible. You want to regulate yourself before the regulators come after you and force you to either go to jail or, I don't know, make your business compliant with the current, legal requirements. So that doesn't come without a cost. So it makes sense for industry to be proactive. And quite honestly, in the United States, it's always been like that. Like when IPO started, it wasn't a regulated space. Industries started doing things themselves. There's always self-regulation. We talked about emergence and how order emerges out of chaos, and humans get together. They form these consortiums, and it's a very common phenomena. And then regulation actually follows. Now, of course, what we're witnessing now is much faster pace of technological innovation, like the waves that come one after other, and it's not going to take 2 decades for regulation to follow it. And like you said, in the current environment, again, just make sure that you're compliant. It's better to do more than less.
That's what we've done. I mean, even in our ICO, I don't think there's a document left that the SEC provides that we have not filled out or filed. We've even filed it within our own state just to make sure. And even during our process, what we've actually discussed with our SEC lawyers as far as compliance goes is whatever monies we raise, we're actually going to put every single bit of it away for 6 months, just in case another compliance issue comes up, and we'll file those and then we'll move on. But what I find is that when people, this may be a little off topic, but when people say, I'm going to do an ICO in a different, I live in the United States, I'm going to do an ICO in a different country and try to skirt around all these things, it doesn't matter. If you do business here, if you do business elsewhere, now you're dealing with 2 jurisdictions, all right? So you still have to follow the rules of the jurisdictions you're in, whether you're in Malta or Singapore or anywhere else. And so you have to make sure that you are compliant every single place your foot touches or a person is actually going to invest out of. So you just have to do your due diligence. But if you do the right thing, I think you're safe. But what I'd really love is for sooner rather than later to be some great guidelines from either the SEC or European Union or someplace that allows people to breathe easy and say, okay, we're going to follow these, we'll do the check boxes, and then now we're ready to go. It's the uncertainty that really gets everybody right now.
So it's an interesting conundrum, because on the one point we're looking at blockchain and we're looking at cryptocurrency and crypto economics as a way to decentralize and engage in transparency and allow for the non-involvement of large corporations or governments. And yet that's exactly what we're looking for. So it's a challenge to be able to identify how do we nurture or develop self-governance within ourselves without the guidelines from some sort of structure. So one of the real challenges from an economic or financial perspective is how do we provide safeguards? Now, the role of the reinsurer in the financial industry is not often understood by most people, but they provide a backdrop of safety for loaning, lending, and investing all around the world. What do you think, in terms of the reinsurer's role, ought to be or will become as either a barrier or a catalyst to crypto economics and cryptocurrency?
I don't think you need reinsurers, right? If trust is embedded into the network, then why do you need, right, all these parties which traditionally played the role of this, third-party safeguard, party overlooking the transaction, etc. And of course, they're scrambling to still be relevant, but personally, I don't see why they would be. Again, that goes back to, like I was earlier describing some of the work that I've done around public markets in the United States. And the reason why they're so liquid is because they're middlemen who are sitting on both sides of the market. Not because people are actually buying and selling it, and there are central banks who are pumping so much liquidity into the public market. So the picture that you see is not the true supply and demand and the way it's impacting the prices, not to mention the dark pools where the real stuff happens, billions of dollars of transactions which never see the light of the day. So you have a system which is extremely fragmented because everyone is struggling to get their piece of the pie. And indeed, the true revolution is about scrape all of that away and let's have a fully transparent system where everyone sees everything, but may or may not necessarily know each other. I would differentiate between privacy and anonymity at this point. But even, of course, from a business perspective, if you're looking at it, even if we have permission ledgers, transparency remains as the first key component. And yeah, I mean, reinsurers need to find something else to do.
There's a company that I really like, and they're trying to create this transparent governance model where for ICOs, and I actually, they've got 2 or 3 test cases in there where you basically raise funds, you put all your funds in this escrow, and by consent, you put in all your governance protocols, and by consensus, when you reach certain goals, there's a release, and there's voting by the participants or contributors, and if you reach those certain goals, then the next round of money is released. So they create this transparency of like, here's our goals, here's our metrics, here we met them, will you allow the release of these funds, and now they can go to the next stage of development. And I think that's maybe almost to an extreme, but I think we've gone from this loose Wild West of like, hey, all these funds come in and we don't do anything with them, and there's no governance and there's nothing, to all of a sudden now like, we're going to control your funds. I think there's a happy medium in there where we actually can do the right thing, and we don't really need reinsurers. We don't need those people. Good Lord.
Okay, I just want to say that they do not necessarily represent the opinions of the reinsurance industry or of me.
I can't do instant transfers from my Coinbase from my credit card now because of these reinsurers, right? So it's the reinsurers that are causing these issues.
It's an interesting challenge because we are trying to balance between self-governance and freedom and the democracy of economics with some sort of safety net. Recently, within the last 2 weeks, there was a court ruling that said the manipulation of cryptocurrency is punishable as a crime. And so that leads the question to, well, if you're manipulating the cryptocurrency, how are you doing so? And how are people not seeing it if it's happening? And that's the challenge between self-governance and self-interest. If I want something and you have it, and I have the ability through my economic stature to shift things so that I have what you have and you no longer have it, is that living up to the promise of cryptocurrency and the blockchain?
Absolutely not. So that is exactly the point, right? And that's, again, having a fiat currency, what does it really mean? That there's a sovereign authority behind it saying, I promise you goods and services worth $10 worth against this promissory note. But we are looking at an entirely different way value is created. This is not new, but it's forcing us to rethink these things now because like it's right in our face at the moment, right? So again, the value of anything lies into what the community thinks is valuable, right? Drawing from, I actually did my thesis work at the Kennedy School on networks theory, and we actually did the mathematics of what the value of networks is, you know, how central networks are, so on and so forth. So really, how the value lies and how it's being interpreted, how it's perceived, how it's measured, depends on people who are using it, right? So, I mean, my pants might be worth $5 to someone and $500 to another. Who decides what it is worth what? In the traditional system, you have the government telling you, all right, this is worth this much. But now the definitions are open.
Yeah, but the interesting thing about it is that we know that the value of something is what we give it. So I can tell, you know, your pants or that chair, we know that. But in the crypto world, what we found is that the value we're giving is potential. And that's different to me, because there's nothing tangible on half the things that are out, well, 90% of what's out there.
So you've raised the most interesting topic. We actually just submitted the first paper on behavioral economics applied to token valuation.
Right.
And it really talks about how value is being created out of thin air. And it turns out we do have some indicators from cognitive psychology as to how people perceive things, and that really goes on to determine where the value lies. But then again, like I said, from a network science perspective, there is the Metcalfe law, which is you can determine the value of the network, which is proportional to the number of people who are using it, scared at.
Correct.
So we have a conflict between brand equity and consumer equity, and then actual equity. So if we're looking at economic systems or financial systems or corporate systems, how do you run a business using crypto as a basis? Or how do you run a country as crypto as its basis if that is the system that we're operating under?
I guess we'll have to wait and talk to Venezuela pretty soon on how they're running it with the petro. But I think the business, if it's an established business, it's a little bit more difficult to incorporate crypto currency into it. If you're a new upstart, I think there's easier incentive models, tokenization of your platform, tokenization of even your thoughts or ideas. Those are able to be done. I mean, I've had difficulty with trying to explain to people, especially in large corporations, how you can take what you're doing and move it over to the block. Well, I don't have a problem taking their technology to the blockchain. It's when they start asking me, where's crypto involved? And a lot of times I have to say, I actually don't want any crypto involved in your business. I just want you to utilize the efficiencies of what blockchain can bring to your organization. That's what we do. And then after that, if we want to create a model that runs off of a token-based system for your organization or for your customers, then we can do that. Most people go to crypto first. I tend to be blockchain first, and then I'll pull in the crypto after that.
Yeah, I don't know. I mean, maybe we should have started saying this, but again, cryptocurrencies versus blockchain, right? Yeah, they're separate things. So blockchain is the underlying technology, and cryptocurrencies is just one use case. And the problem with this use case is they're extremely volatile, and businesses need certainty and relatively stable prices, if not more, to actually do business.
So we're just about to wrap up. So if there are any parting thoughts that you have.
We're going to take some questions.
Great.
Okay. We can take some questions. How about that?
Here.
What's the name of the company or the organization you refer to that does the progressive releases of funds?
Increment.
Okay. I got a question from Navroop. You in academic.
Rightfully so, right? Increment. That's a good name, right? That's good. So,
what do you think, and you study all this blockchain, and what do you think, which industries have going to more affect right away of anything else?
So finance is always the first one to jump on board on any new technology. Historically speaking, I think that will continue to be the case. I'm really glad healthcare is on board because
they're both sides of that.
I have health insurance here, and my God, I would like it. I would like it to be more efficient, right? Given the cost.
But we don't need reinsurance, but we need health insurance.
We need insurance,
right.
not reinsurance.
What about real estate?
Yeah, so real estate is starting to emerge, land titles, things like provenance, and all kind of use cases. And again, I think, for example, countries like Ireland, and not just developing countries, where your land alone can be the most important life-defining asset that you might have for you and for generations, right? And it has happened in the past that, I don't know, corrupt government officials come in and say, oh, you've been living here 100 years? That's fine, whatever, but here's a paper which I just forged, by the way, and this doesn't belong to you anymore, and get out of here. It's happening right now as we speak. There are these development projects in India. There's total backlash from the civil society against these kind of practices. So again, blockchain, I think, can be a game changer there, but then a lot of things have to fall in place before that happens. And for the use case that excites me the most is self-sovereign identity, and you having control over your identity, and you monetizing it, and not Mark Zuckerberg.
Yeah, so one of the things that the company that I'm the CEO of, the Opinion Economy, we're actually created a blockchain underlying architecture to do just that, both identity management and experience and insight management. So your active and your passive data becomes an asset that you control in a free market economy, so that you don't have middlemen who are distributing information about you without your permission and profiting from it at your expense.
Okay, good. Navroop?
Yeah. I agree. I agree with all those things. Plus, since healthcare is my bent, I think this next year you're going to see fintech and healthcare probably be the two biggest areas where you're going to be impacted. And I'm a big fan of identity management. There's no true good self-sovereign platform, and I think when that happens, you're going to see drastic changes in the way data is managed.
Okay, we're going to take one question, sir.
Yeah, I wanted to get an expansion on the...
Yeah. Bill, yeah, just quick.
If you could expand on what agency it was that said coin price manipulation was a crime, and what jurisdiction that is germane to?
Sure. So it's actually...
It's a question for legal teams, isn't it?
Yeah. So I'm not...
So we're going to have a panel, actually, in the last panel.
okay, that's right.
Law. Yeah,
Well,
they're all going to be there. So if you don't mind, Bill, we'll wait until the day. Okay, any more question? We can take one more question. Sir, go ahead. Yeah, go ahead, please.
Yeah. So when, like the SEC discussion yesterday, governments typically come in and say, you are in the wrong, fix it, you got 24 hours. Like in healthcare, it happened. The FBI came in, fixed this security law. Right?
Yeah, could you repeat the question?
Sure. The question is around what happens when some legal entity, the government, comes in and says, okay, we don't like the way that you're acting, you have to fix it retroactive, or you have to fix it moving forward, and you may be held accountable retroactively.
Okay. Well, that said, and I appreciate that. I want to appreciate you guys, and especially Nerve, because of the academic work. But I want to ask last question from you over here. When you see all these universities around the world, from Cambridge, and I know you're involved with MIT, they're opening a lab for the blockchain? What's going on? Just in the final thought.
Yeah, so the MIT Media Lab is a bunch of research centers which are housed under the Media Lab, which is the bigger lab, and the Digital Currency Initiative, Connection Science, where I'm a fellow, and actually a host of them are involved in the crypto space, I would say. UCL London, the Center for Blockchain Technologies, is again a research center at the moment, but they do have, I think, starting this year, the London Blockchain Lab, which is completely student-led, and so on and so forth. It's interesting you raised that question, because just day before yesterday, I was in Boston. We had the Blockchain Core Summit, and the working group that I was part of was blockchain academic research. And one of the things we were looking at, traditionally the way research worked, is that like NSA gave grants to research organizations which already had a name, and then the research would happen. But now we are looking at what is a decentralized and open research effort coming from around the world, and sometimes you don't even know where it's coming from. And I think for me that's fascinating. That's something that shows that it's no longer a few people or a few top institutions which would have hegemony over advancing human knowledge, if you may.
Thank you on that notion. Thank you very much. We're glad you're here. Appreciate it. Give it up for the our good panel here. Thank you.